says it's recording. So we're on, Mike. I'm not very good at editing videos, which is why I always have to say that. So I have Mike from Refined Lending with me, and we're going to talk about buying a home today in this hot seller's market. Just everything from affordability to how to win a deal, and all the little moving parts, and maybe give you some leverage in this market as a buyer. We'll have a separate video for sellers. So if you're not buying, if you're just selling, you can watch that one instead. So Mike, let's hear it. What's the very first thing we tell people to do if they think they want to buy a house?
Yeah, and this is a common mistake that buyers make, and especially in this market, is you need to understand what your budget is, and not necessarily on the purchase price of the home, the price of the home, but it's your monthly budget. So what's your goal for your monthly payment? Yep. Yeah. What's your goal for your all-in monthly payment? And making sure you're comfortable with that, because you got to set the budget, you got to stick to it, and maybe the home that you're looking at online aren't attainable with the budget that you have. A lot of online calculators don't accurately depict it.
That's what I was just going to say. So you said all in budget, and that's not what most public online calculators have. I have one that I use for buyers that includes all in. It's got association dues, taxes, mortgage, interest and principal, and then of course it also estimates insurance for us. So that would be an all in, right? We call that PITI plus association.
Yes, you got it. You got it.
So principal, interest, taxes, insurance, association. You need to know all of those costs to get your all in budget. And then of course utilities and other things, and that comes in a lot when you're deciding to either purchase your first home or move up into a larger home. With the low interest rate environment right now, those payments are so affordable from a principal and interest standpoint, right? But we are in an environment of high taxes.
Yep.
And some areas have high insurance costs.
Yes.
And depending on the association, some dues are really reasonable. Sometimes you get into a condo where the dues are super high because they're covering a lot of amenities and a lot of building structure for you. So that's the very first thing, right? Is understanding what you want to pay, and then either through your lender or an agent that has an all-in calculator, see what kind of home that is, like what kind of home price that is. The area you want to be.
And one thing real quick too that I notice on the online calculators is they always assume a 20% down payment. So if you put less than 20% down, you also have mortgage insurance. And depending on what your credit score is, mortgage insurance can vary pretty drastically. So that's why it's a good idea to check that out before you go look at that house or shop around online.
Okay, so now we know, based on the down payment that you want to do and your total monthly comfort level for all in PITI and association. What's the next step?
It's always to get pre-approved. And this is the second most common thing that I see buyers make the mistake of not getting pre-approved before you go take a look at the house. Because in this hot market, and Sarah, you jump in on this, if you're not pre-approved and you can't make the offer right away, if it's the right house, you're going to miss out. And that's the experience that I've had. So.
And you can get an online pre-approval quickly and easily. Let's not hide that, right? Like, I see it all the time, instant approval ads and commercials. What it boils down to though, in an offer, is that listing agent, if they're good at their job, is going to question the approval letter. Where did you get it? How did you get it? And what information was provided to come up with this letter?
Yes. Yes.
And what kind of information do they need to come up with a good letter compared to what they can get in a few clicks online?
Right. And it's something, especially in this market, that we do a lot of, being a local lender, and you got to get the documents up front. And the documents are 2 years taxes, 2 years W-2s, most recent 30 days of pay stubs, and asset statements to verify where your down payment's coming from, if the funds are qualifying and usable. that's also something that we have the conversation with the seller's agent on the property to help build you as a buyer a better case and to get pre-approved or getting the offer accepted, because you are fully pre-approved. It's not something where you entered in information online and it spit out a generic letter to you, because that doesn't carry a lot of weight in this market from what I've seen. Sarah, I know you can jump on that, because if you're going to do your due diligence on the offers you're receiving,
Well,
that's a very big piece of it.
okay, so on that, first of all, you want to trust the lender, because if you're getting a house based on rough numbers, which is usually what those online calculators and pre-approval letters are, they're all rough. You as the buyer might be in trouble later when all of a sudden your mortgage insurance is way higher or something because of your credit or down payment. And if something maybe wasn't exactly accurate or overlooked in the initial online data you dumped in there. So there's the first thing, is as a buyer, you could suffer. The second thing is, again, a good seller's agent is going to call that lender and ask, have you collected the documents? What would still be missing to issue an approval today if they got the house, especially on a fast closing? They're going to be concerned and they're going to ask. Or if the sellers are relying on it for a move out of state or something, there's going to be extra diligence about you as a buyer. And a lot of people are appalled by that. But if you think about it from a seller's position, wouldn't you want to know that the buyer is solid and not going to flake out because they had a risky job or undocumented income or something that affects their lending ability? So we should talk about that a little bit too. Appraisal waiver.
Yes.
That is also a benefit to buyers, even though it sounds a little scary based on what an appraisal is meant to do. An appraisal is meant to say, okay, this house price is in line with the market. But if you're shopping and you're competing, you know what the market is, right? You know how much you're willing to pay. So from a buyer's perspective, I say if it's a long-term purchase for you, an appraisal waiver is all beneficial. It's going to help you win. Mike, you know why.
Yeah. And I was going to say, I'm in the market. I'm in the business. I write mortgages every single day. And if I were purchasing in this market and got an appraisal waiver, I would be 100% confident in it, just because of the data the decisioning systems pull in that neighborhood, in that market, to say, yes, we're comfortable with this price that they're paying. If there's any doubt that the home doesn't support that value, the underwriting system is not going to give us the opportunity for the appraisal waiver. The benefits of the appraisal waiver are, one, you save the money for paying an appraisal fee, which $575 to $700, depending on the type of property and the research that the appraiser has to do on it. So that's number one. Number two, it gives you and the seller a peace of mind that, all right, we got past the appraisal contingency within the purchase contract, if there is one, and you're moving on just one step closer to closing. So it gives you a little bit of leverage too, as you're going through the loan process with the seller, just the peace of mind that they're going to get from that.
Right. And then you don't have to put an appraisal gap clause in. I don't know that you've seen as many of these lately as I have, but what we're starting to see is, let's say a home is listed at 400,000 and you've got two buyers that are out there making offers. I mean, there's going to be a pool of buyers probably, but two buyers making an offer that have kind of risen to the top of the seller's list. And one naturally rose to the top because they were cash. And, there's a mindset that cash is king, right? Mm-hmm. And they're offering 400. They're just saying, here's the list price. We don't need any closing costs. Here's just cash. You get what you're asking for. And then the other offer is financed, but they are offering 425 and they have an appraisal waiver, which means even if it is only worth 400, it closes at 425. Mm-hmm. And the buyer does not have to bring extra money to the table to make it there. In a seller's mind, that financed offer with no appraisal wins over cash every day, because appraisal is one of the biggest hiccups in financed offers.
Yes, I agree 100%. And the one thing you will not get is one of those fast pre-approval online systems will not have that type of detail that they can share with the seller's agent or have that conversation confidently.
Yeah.
Yep.
And so who gets an appraisal waiver, Mike?
It's real random, and it's up to the system. So I've seen them as little as 5% down, depending on how strong that price of the property is with the system, all the way up to 10, 15, 20% down. So we're seeing them more often, and it's a good thing. It's not a bad thing. It's a good thing because it's just one step closer to that closing.
Well, and I'm also and it's some of this is lender dependent too, depending on their underwriting systems, but seeing it really commonly when people have 25% down or more, no appraisal needed.
Oh, yeah.
So buyers with good cash down payments should be asking if they can get an appraisal waiver.
Yes.
It helps them with leverage in their transaction, and as long as they're comfortable that they've been shopping and this is the house for them, like I keep going back to that. I don't want people making, spur of the moment decisions because they feel pressured, but an appraisal waiver is a big deal in a purchase contract. As the pandemic has skyrocketed prices, appraisals are looking at the history. They're not looking at the current market, and history is causing a lot of appraisal problems. All year last year, at the beginning of the year, it was fine because we were coming off of a slow growth market. But when we shot up after people realized that the pandemic wasn't like a 3-week thing, when they realized this was going to be a while, those incremental double-digit price appreciation things due to the tight market were causing, I'd say, 1 in 3 deals to have appraisal problems. That's a lot of appraisal problems. And so you can see why that will be such a big deal. And I hate to put so much emphasis on one part of the buying process, but it is big right now. It is a big deal. It is a big problem for me. The second problem that buyers are having, and again, the appraisal waiver allows you to not have to come with that appraisal difference to closing. So you're not having the cash outlay to make up for your competitive offer if you can get an appraisal waiver. The other problem that buyers are having is when they don't have their own closing costs, when they can't pay their own fees. All they're doing is driving the market up, because there are so many buyers in the market right now that either have cash or big down payments because they had equity from another house, or savings. They are using a 401k or something to make a big down payment and pay their own fees.
Gift from a family member you can use for that.
I mean,
and I'm seeing a lot of, not to jump in and cut you off, but I'm seeing a lot of buyers who are, let's call them experienced buyers, because they jumped into the market trying to get an offer accepted on a property through the end of last year and so far this year, and have understood that it's not necessarily realistic to get those closing costs paid by a seller anymore, and have saved. So they have that money, and they're coming in with a much stronger offer now in 2021 than they were at the end of 2020. So that's another thing that I'm seeing.
Well, and I just, so there are companies that help, manage paperwork for agents. And one company posted that in 2021 versus 2020, just in the few months we've had so far, they went from having nearly 60%. Now, this is not accepted offers, but nearly 60% of the offers in 2020 were asking for closing costs. And now this is more of a entry level kind of buyer transaction situation. We're not talking luxury lending here, okay? They're managing on a lot of first-time home buyers, maybe some move-up buyers. Just in the beginning of the year, they're seeing less than 40% of offers that go out asking for closing costs.
It's a
And
wild
so
difference. Yeah.
you just need to know that if you're asking for closing costs, 60% of the people you're competing against are not.
Hmm. Yes. So save your money. Save your money and use it. It's going to help you get an offer accepted on a property.
Right.
Yep.
And if you really don't have that kind of money saved up, Mike, let's talk about some ways you've seen buyers get cash for their own deals.
Yeah, and the biggest one is a gift for a down payment from a family member. So if it's from a close family member, parents, aunt, uncle, fiance, brothers, sisters, etc., we can use that money for your down payment amount, for your closing costs. In addition, it doesn't all have to be a gift. Any money that you have saved up, you can use as well for that. And depending on conventional financing or government financing, there's a couple different ways that we have to document the gift for the down payment and closing costs, but we make it smooth. We figure that out up front, and we tell you here's what we need, and here's how to make the move and the money, so it doesn't cause any additional issues. I've seen a lot more of this come across too is cash on hand. We can't use cash on hand. So if you know you're going to start shopping to buy a home, get that cash deposited into your accounts so it's quote unquote seasoned, which means that depending on conventional or FHA financing, we need to see that money in the account for one full monthly bank statement or two full monthly bank statements. It's one for FHA, it's two for conventional financing. So we can't see a large deposit go into that account and use it as qualifying down payment amount. So just kind of off topic, but that's
So
something
take
that
your mattress money and go
it.
put it into a bank savings account right now.
Yes.
If you're going to shop for a house, it's
Yeah.
not going to work in last minute financing situations. This also goes into why getting the pre-approval is so important, because then you will put your ducks in a row. You will season your cash. You will learn what kind of gift funds you're going to need, and you're going to have that information readily available when you make an offer. So just as far as other ways to get money, you may hear about Minnesota housing. You might hear about because they have a down payment assistance program. You might hear some lenders have their own programs. Again, let's go back to being competitive. Whenever it's stacking one loan on top of another loan to a seller, that is more risky than one loan. So those programs are looked upon very poorly right now by sellers because the market is so competitive. So I'd stay away from any program that will appear as a secondary loan or an underwriting condition in your offer. And we can't hide that. We have to disclose that you're doing that in the offer. So Mike, I think you've worked with some programs that aren't like that, where all of the funding is pre-approved up front.
Yes.
And those are some good ones that maybe some first-time buyers could call you about. I think that most of what you do is for first-time buyers on those.
Right. Yep. First-time home buyers. And it's more, instead of a loan, it's a grant program called the Wish program. So we are expecting here soon, within the next couple of weeks, getting the announcement on what the program details will be versus 2020. But just in 2020, we're able to, if you have $5,000 for a down payment, the Wish program would in 2020 match your initial investment, that $5,000 times 4, up to a max of $22,000. So if you have $5,000 to put into the transaction, we can get an additional $20,000 to put as down payment for down payment and closing costs. And it's a grant.
It's you want you to use your own money.
Right. Yeah. Yep. Exactly. So we do have some great programs that are considered or looked at a little differently for buyers who deserve to be in a home and deserve to own a home and have their budget done, have the pre-approval done up front. That's not something that we can turn over overnight. So if you want to explore those programs, let's get started soon. If you're planning on shopping for a new house in the next 60 days, it's always good to start up front. Start early, start early, start early. Because then we can take a look at your credit too. And we get a lot of ways to, if we need to, increase your credit score to get you better terms, better interest rates,
Right.
things like that. So,
yeah. Again, like I said, I hate to get so hyper focused on just little parts, but these are things that, I mean, you could be watching videos of mine even for the last how many years, and the focus wasn't as heavy on things like appraisal because it wasn't as competitive as it is now. And so if you've got questions about how to be competitive, you really need an experienced agent and an experienced lender that are doing a lot of business in this market, in the purchase market, not the refinance market. To local again too, right? To really understand what's going on, to know things like I do, like this company, what they're seeing when they're looking at private deals, because those things are not published, right, to the public, how these deals are getting done. And we're here for you. Mike is, I am, we've got title people that are here for you, and know this market. We're doing a lot of deals in this market. So
yes, we are.
any other tips, Mike,
Starter.
before we sign off, you know,
Yep.
on doing a deal in this market, other than planning is so huge?
Yeah, I'm just gonna review our points just because
Okay.
that is the most important. Set your budget for
Yep.
your total monthly payment. Don't rely on the online calculators; they're incorrect. And get pre-approved up front. Pre-approvals are good for 4 months at a time, and we update them at the end of 4 months with a new credit report and updated pay stubs. So get pre-approved up front. Be a prepared buyer. It's going to go a long way in presenting the offers with the sellers and the listing agents, being able to have a confident conversation with them, your lender. So,
And competitive terms.
competitive terms. Yep.
Work with the lender to get those competitive terms, talking about the appraisal waivers, making sure you have enough money to pay your own down payment. We don't want you frustrated. We want you to win. This market's not for the faint of heart.
Nope.
All right. Thanks for talking to me about that today, Mike.
Thanks, Sarah.
Yep. Bye.